This is Hot Stocks. Let's talk a little bit about the most awaited IPO. That's D-Mart. We have Amnish Aggrawal, Senior Vice President Research at Prabhudas Lilladher, to talk a little bit more about the nitty-gritties. While, mind you, the index has come off quite a bit from the high point of the day. Amnish, thanks so much for waiting by. To start off with, most of the peers of D-Mart function on an asset-light model. D-Mart has adopted the owned store strategy. What are the pros and cons to this?
So can you repeat again?
I want to talk about how D-Mart stands out, or what are the cons with the fact that it has its owned store strategy versus the peers which have an asset-light model.
Okay. You see, if you look at some of the peers, whether it is the Future Group or the companies like Trends or Shoppers Stop, so everybody takes the store, which is the real estate, on a rental model. Okay, so you pay the deposits, then you convert the store, you do the fit outs and all, and then you are paying the rent. And rent is something which is not static. There is an annual inflation of at least 5 to 6% in the rental. Okay, so as against that, this company has followed an owned store model where I think quite a bulk of their properties, in fact the land is also owned, or in certain cases it is the long-term lease which they are having. So what happens is that your initial capital cost seems high due to that, because you are owning the land, you are building stores on your own. But in the longer term, it works out to be better, because your first of all, the commitment is for the long term. You can alter it at your will, and because there is an annual inflation in the rental, and whereas here your costs are freeze to a certain extent, so it works out to be better in the longer term.
Amnish, average same-store sales growth was 24% over FY12 to FY16. Is that a trend that's sustainable into the future as well? Or perhaps you expect it to increase too?
You see, if you look at some of the peers of D-Mart, they have been struggling even to achieve double-digit same-store sales growth. So the same-store sales growth which this company has achieved is unprecedented. Now, whether it will continue in future, it's very difficult to say. And same-store sales growth calculation also, I would rather focus on sales per square feet rather than same-store sales growth, on which I expect that at least mid to high single-digit increase in sales per square feet should continue.
Okay. Right. Just to follow up to that, you seem to be seeing some sort of traction region-wise in D-Mart. If you look at essentially where they are spending, there are particular pockets and states and regions where the focus is. The company has shown significant dependency on Maharashtra and Gujarat. Could that be a concern for the company? Because any adverse development affecting the operations in these areas could lead to a lower top line. And I know this is really a far-fetched risk, but even so, in the prospectus it's been highlighted, so we just wanted to get your thoughts.
You see, what has happened globally in case of hypermarts and supermarts is that the models which have been following the more regional or a concentrated strategy, they have been successful. For example, if you are in Maharashtra, take any state, you set up say 30, 40, 50 stores over there, you are able to better leverage on your brand, on the tastes of the public, on the assortment, as well as your infrastructure. So even say companies like Walmart, which is a global leader in this segment, so they had also followed a similar kind of a strategy. So while one might see some risk also in this kind of a strategy, because your sales are more dependent, for example in case of D-Mart, today Maharashtra and Gujarat are close to 81% of their sales. But having said that, if you are focusing on the states which are having per capita income higher than the national average, where you have been able to gain considerable ground and where you are concentrating your stores, I don't think it is a bad strategy. Yes, it could be risky, but you could have seen that in case of some of the other industries also, some of the regional players have done well. And they are actually increasing their, you can say, the number of states which they are covering now. It's, I think, 8 states and 1 union territory. But even then the concentration will continue to be in the top 2-3 states, which is Maharashtra, Gujarat and Telangana. So I don't see it to be having any unprecedented risk.
Thank you for joining in, giving us your clear assessment on D-Mart as we await that mega IPO opening and whether or not you should subscribe to it or not.